One of my YouTube subscribers, he was asking about how to study volume on the daily time frame chart. We have discussed about volume on the weekly time frame chart. I use the same process to study volume on the daily time frame chart. The problem with a candlestick chart on a daily time frame chart is that you can't make much of volume. So for example, you have a look at this base. This is persistent systems. This is an old chart. So as per the SEBI regulations, we are allowed to discuss this chart. Have a look at this. If you look at volume, you really can't make much of it because in in if the color of the volume bar is red, that does not necessarily mean that that particular candle is not in our favor or in our favor. We cannot draw that conclusion. You can't look at the blue line and say that, okay, all the red bars are below the blue line. It doesn't work that way. You have to convert this to a bar chart to get a better understanding of volume. Because the problem, what happens if the bar is red, okay, and if the closing is strong above the midpoint, that's actually a bar which is in our favor. On the other hand, if the bar is green, but the closing is weak, for example, the closing is below the midpoint of the same candle, that is actually a bar which is not in our favor. Okay, so we don't want, that is the reason why we don't want to use a candlestick chart to analyze volume. Overall, if you see, most of the time the volume has been uh, below the average. But if you want a more refined analysis, then a bar chart is better. Before that, let me draw the base. So the base looks like this. And this was a nice base. The height of the base was less than 10%. So another important point, when the height of the base is less than 10%, in that case, I don't give much weightage to the green zone closing. So in this case, not a single candle has closed inside the green zone, and your buy point is somewhere here, the high of this candle, which is 2974.50. So 2974.50. That's your buy point. And look what happens. The stock breaks out and it continues to go up. It goes up a lot actually. Okay, I don't want to move it further. It went up a lot. So it was a nice base. Okay, very tight base within 10% range. Let's convert this to a bar chart to get a good understanding of volume. By the way, what do we need in volume? We need a high volume rally, we need a low volume consolidation, and we need a high volume breakout. So that's a high volume rally, as you can see here, low volume consolidation, as you can see here, and then a high volume breakout. Let's convert this to a bar chart and see how interesting the volume reading becomes. Even on a daily chart, there's no problem looking at the volume, but on a bar chart, it is more refined analysis. So I will go here, convert this to a bar chart. Now for a bar chart, the closing is based on, the color is based on previous close. So green means the closing is above the previous day close. Red means the closing is below the previous day close. Volume, let us convert this to a histogram, make this 100% and make this 100%. And most importantly, color should be based on previous close. So this way, the color of the bar, price bar, and the volume bar will match. Okay. Now have a look at the red bars inside the volume. Now we don't need to look at the green bars because green bar means the price on that day closed above the closing of the previous day, which is fantastic. So we really don't need to look at the green bar. How does it matter whether the green bar is high volume, low volume, as long as we are getting the closing which is above the previous day close? So the interesting thing is red bar. So let's start from the base. So this was average volume, I would say. I wouldn't call it high volume, it's just touching the blue line. This was average volume. Then look at this bar. This looks like high volume. This bar is a problem. Then you have this bar. This is actually a strong closing because the bar has closed above the midpoint of the bar. So it is actually in our favor. So there is only one bar which is a problem. Then what about this? This is another bar that is a problem. These two bars are high volume, but the closing is above the midpoint of that candle, above or at the midpoint. Then this is not a high volume bar. This is a high volume bar. So three bars which are a problem. And this is again strong closing, closing above the midpoint on high volume. So out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 17 red bars, 3 are not in our favor. 3 means the bar has got high volume and it is a weak closing. Weak closing means closing below the midpoint of that same bar. So you have to look for high volume, weak closing. Okay. If you get high volume, strong closing like this, it is actually a positive bar, which is in our favor. Okay. So here, when you look at the bar chart and you match the color of the price and the volume, you get a very accurate mathematical way to define the volume profile. 3 out of 17 red bars are not in our favor, which means 14 red bars are actually in our favor. Either they come at low volume, or even if they're coming at high volume, the closing is strong, which is actually a good thing inside the base. Okay. That is why I say you can maintain two different layouts. This is one layout for a daily time frame, another layout for candlestick uh, chart, same daily time frame. For volume analysis, you can come here. You see these green bars all above the, see all green bars above the blue line. High volume rally, low volume consolidation, and then high volume breakout. So look at that volume, green color. Okay, continues to go ahead. Most of the time, the red bars are below the blue line. Now there came a big red bar here. This was a problem. However, the way to analyze that red bar is this volume is way above average. Like average is 1 million and the actual was 14 million. So in spite of 14 times more volume than average, how can the price close only 0.66% below the previous day close? So you look at this number, okay? Look at this bar. 0.66% down on 14 times more volume than average daily volume. Don't you think that's an anomaly? Don't you think there's something wrong there? So if the volume is so high, how come the price is not falling 3%, 5%, 6%? How come the volume is how come the price has only fallen only 0.6%, which means the supply that is coming from institutions being absorbed by buying power from institutions. So there is a fight going on between institutions, which is why you see a high volume, but there is not much price movement, which means institutions are still at play. Whenever the supply comes, it gets absorbed. Okay. That is why looking at volume profile on the bar chart is very convenient than looking at volume profile on the daily time frame chart. That is what I wanted to cover in this video. So maintain two different layouts. One is a candlestick, one is a bar chart. Quickly look at volume on the stock that you are planning to buy. You can get a good idea of whether you are getting into a good stock or not. At least you can get a good idea of what risk you are getting involved with. Thank you so much.